Okay, good afternoon, everyone. Thank you so much for joining us today. This is Chad Robbins from World Cup Advisor. We are lucky enough to have one of our featured advisors, John Bannan, with us today from Comla. I'm just going to tell you a bit about John and give him an introduction, and then John will do his nice presentation for us. If you do have questions on today's presentation, you can put them in the question box. If it's appropriate to address them right away, we'll do our best to address them. If not, we'll hold off towards the end. After John is done with his presentation, I'm just going to do a brief explanation on how the World Cup Advisor service works with his programs. If you are not already familiar with Mr. John Bannan, he is the co-founder and CIO of Comla Tech Limited. He's responsible for leading a dynamic, predictive analytics and pattern recognition firm focused on helping investors make educated decisions and reducing their risk in the market. He's got over 2 decades of experience in the financial industry, and John is now expanding his expertise into managing accounts through his CTA and through his World Cup Advisor services. John began in the industry working as a market analyst in the UK, and he later worked as a self-employed trader where he spent 6 figures on his own trading education and has designed algorithms on multiple trading platforms. He eventually co-founded the stock market education and signal service company, HowDoITradeStocks.com, back in 2011. And his success led him to launch Comla Tech, where he currently enjoys a continued track record of success through his systems that he brought to World Cup Advisor and to his CTA. Today, John's going to share with us some of his strategies for keeping his cool in these volatile markets and what has helped him weather the storms over many years in this industry. I just want to point out the question box. If you guys do have questions as we go forward here, just click on that question mark towards the bottom. At this time, I'm going to stop showing my slides. John, are you there, sir?
I'm here. Hi there. I'll just pull my slides up here. Okay, hopefully everyone can see that. Thank you for the introduction, Chad. Appreciate it. And thank you for all of the attendees for coming along to hear me talk about what I'm doing, what my approach is to the markets, and how to deal with these volatile times. So I will get started. So as always, disclaimers up first. We have to put a disclaimer for no promises made. We do our best to follow our systems and do the best we can, but this is just one of those things that's got to be put forward every time. So let's just go right into the whole message here. Trading is not easy, and there's more than one way to cook an egg, as we all know. I gravitate away from day trading. It's just not my thing. The sort of Goldilocks scenario for me is swing trading. I like to trade daily charts. I don't like doing long-term investing. I started out trading 20 years ago, or investing really 20 years ago, and then got sort of bored with that, too slow. Go into day trading, too fast, pulled back, found the sweet spot for me, which is building systems around daily candles. There is no magic indicator, as most of you know. There's probably some really experienced traders on here. There's nothing magic about any indicator that is going to make you lots of money on a consistent basis. We've all seen the ads on Facebook where some magic indicator is supposed to change your life, and it just is not true. It's complete BS, as you all know. And like Malcolm Gladwell said in his book, The Outliers, it takes 10,000 hours to get good at anything. And trading is certainly no different. It's probably taking a bit longer than 10,000 hours to get any kind of consistency, to be honest with you. And for me, you need a system. I'm a quant. I trade purely algorithms. I focus on system building. I don't trust myself to make gut instincts. And I got out of the gut instinct business a long time ago. For me, it's all about trading systems. So I wanted to sort of talk about an analogy. It's one of my favorite analogies that I put forward in my own mind towards trading. And that is from this book, Switch, but it's from How to Change Things When Change is Hard by Chip and Dan Heath. And that made the stick book, they came out about 10 years ago, was terrific too. And what that's talking about is talking about human behavior. One of the main themes in the book is this analogy of human behavior being a rider and an elephant, okay? And the rider being the logical side of our brain, and that's the outer cortex, neocortex. That's where our logical thinking occurs. It's what really separates us from other animals, and we like to think we're in direct control of all our decision making. And what most of us fail to acknowledge really is we're all riding around on this 1,600-pound elephant, and that is the emotional side of your brain. And it's dragging us through life, doing really what it wants to do, because try and stop an elephant and you're sitting on top of it, right? It just wants to go wherever it wants to go. And that is the emotional aspect, which is one of the challenging things about trading. Now, it makes sense if you think about it, because if you had to go through some deep analogical analysis of every single decision you ever make during the day, you'd never get anything done. It'd be analysis paralysis. And our brain is really developed in a way to allow us to rely more on our feelings and intuitions to do things quickly, and that's just the way we're set up. And if you look at it this way, before we even talk about trading and investing, let's talk about something we can all agree on, and that is, diet and exercise. We all know we have to diet and exercise. We all know we have to live healthy lives. Gym memberships. Logically, we all know this to be true. In fact, logically, we probably want to be fitness models, but the emotional side of your brain has different ideas. I know my emotional side of my brain, gets home, wants to hit the couch and eat French fries and pizza, and that's just the way I'm set up. That's the side that always wins for me, and we'll have to try harder at it. But that's one of the challenging things about trading. Our emotional side really is very, very powerful. And when you realize that the emotional part of your brain is the one that's in control, then you can see why 95% of traders fail at making any kind of money in the stock market. It's a very, very challenging endeavor. So trading is hard. We've heard that stat, 95% of traders fail. It's a well-known stat. It's all across the internet. And, I've heard it so many times, but there is actually no defining research to back that up. It's just sort of thought to be a general number. However, there is some research that talks about it being much worse than that, and that is a study that was done in Brazil in 2015, where they took 1,600 day traders and they watched them trade for a year, and their analysis of the results were 97% of them actually failed to make any money. So only 3% of them made money, and the conclusion was that it's virtually impossible to consistently make money as a day trader, and certainly make a living at it. It's virtually impossible. Now, I'm not saying you can't do it. Some people can do it. Some superhumans out there can do it, but most people can't, and that's showing up in numbers. They also found that after 300 days or more, anyone that stuck that long, only 1.1% of them actually earned enough to cover Brazilian minimum wage. And even worse than that, 0.5% of them made enough to salary of a bank teller, so a low-level bank employee. Not exactly inspiring stuff, right? It's something that we want to do. People are on this call. You want to trade, you want to do well, you want to make money. Money is power, right? So, but trading is hard. It's a very difficult thing. It takes a long time to get good at it. And almost always, in my estimation, you need a really solid set of rules or a really great system, and then you need the emotional discipline to follow it beyond that. So it's a very challenging endeavor. And now I want to bring up this word here, certainty. This is a slide that I've used this slide for the last 10 years in different presentations, and it was designed to convey to an audience that what I really feel about what I'm chasing in my systems. Now, what I really realized with this certainty idea is I'm speaking to the elephant in the room. I'm speaking to myself, right? I want to be certain when it comes to trading and investing. Now, some may say that is impossible to be certain, but certainly when it comes to system trading, it's the closest thing you possibly can get to in terms of knowing what to expect. Whether that's real or assumed It can only be achieved through systems, and we're going to talk about what makes a great system. So here's a slide basically on some metrics around what makes a great system. Some of you may know this, some may not. You need to know the system works for a start, right? And the only way to know that is to look back at the historical performance, or whether it's real or back test. Both are powerful. Obviously, real results are better than back test results, but still they give you a good idea of the longer term, because you got to start somewhere. One of the things here is average winner versus average loser. You need to know what the size of your loss versus the size of your win, right, on average. So if you're only right 50-50, then your winner should be closer to 2.5 times, 3 times, ideally, the size of your losses. That's just the metric. If you're right 8 times out of 10, you can get that right down to 1-to-1, and it'll still do really well for you. So it's just mathematics. Average profit per trade, another really important one. I once built a trading system many moons ago when I first got into building algorithms that was a straight line equity curve. I thought it was an absolute genius. And it was the average trade in the ES was $30, which thankfully I clued in that wasn't going to work very quickly, because your average tick is $12.5. So you have a couple of points of slippage, a couple of ticks of slippage even, and your system blows up. So you need a really solid average profit per trade so that you've got room for slippage and other things that happen. So that's one of the metrics too. Drawdowns, very obvious one. We can't always be right. We need to know what the worst case scenario is in history of a system, both trading it forward as well as looking in the past. That can be a percentage or a dollar amount if you're trading futures. It doesn't really matter as long as you know where it is and know what to expect. Drawdowns are one of those things that we can come to expect. And, if I have a 5% drawdown, even a 10% drawdown, no big deal. I know I'll recover fairly fast, but it's the nature of the beast. We can't always be right. But as long as it's not out with the system norms, there's nothing to do. If it goes out with system norms, then you're looking at a recalibration of your system itself, which is an often thing that people do. And the past results, again, as I mentioned, are the closest thing you have to appeasing that elephant in our brain, right? We need to know we're going to win, and unless we're going to make some bad decisions. And the last one, which I've highlighted here, is percentage profitable. For me, that is a really key one. I like high win rates, and I'm going to go into why I think that is important. And I don't think anyone should tell you anything otherwise, because high win rates for me are really important because of the emotional aspect of trading. It's a lot easier to trade a system that wins more than a system that profits more. And what I mean by that is sometimes I built systems that actually are more profitable than what the ones I actually trade. However, I'd rather be right more often, make a little bit less than be, obviously I'd love to be more profitable and win more. That would be the ultimate. But even if you build a system that's more profitable over the long term, it's still better to have a system that wins more. I remember hearing a story about a chap in the 80s who, I believe it was Richard Dennis, and he, the Tuttle Traders, I think he was testing the market, and his win rate was like 2%, but his wins were so gigantic. It was such a profitable system, it didn't matter. For me, I couldn't trade a system like that. I need a high win rate so that I can sleep at night. There's the guy sitting again top of the elephant. Those losing trades are really going to spook you. And the more you are right, the less mistakes you make. This just is such a key point for me. I chase high win rate systems, and I build high win rate systems. And the reason I do that is because I generally, in the past, I only ever made a mistake when I'm in a losing position, right? It's actually sometimes very difficult to hold on to a big winner and follow a system. That's also challenging, but it's more challenging to make a mistake, to not make a mistake when you're losing, because that's when you don't want to take the loss and you do something stupid. So that is, I like to build high win rate systems for that reason. So let's talk about stop losses, what to do with those. Nothing guarantees a loss like a stop loss, but we need some kind of risk management, right? Stops are meant to protect traders from large losses, but a lot of small losses and a lot of stop outs can really destroy your win rate, can destroy your trading system, and we don't want that. So you have to find that balance. being stopped out right before the market moves in direction. How many times does that happen to you? It's a regular occurrence. You need to have something in place that stops you getting spooked while still managing your risk. And again, it's about that long-term back test, long-term trading aspect that you can see what's happened in the past. You want to play to not lose, that's the, sorry, you want to play to win, not to not lose. And that's where stop losses can really trip you up. But you do need a strategy for runaway losses. I'm not saying you don't use stop losses or anything like that. There's certain things you can use that are better, I believe, than a hard stop. Options, for example, the way that options are running now on a daily basis, that is becoming a much better way to manage risk than it ever used to be. It used to be only monthly, then weekly options. It became more popular, then it's daily now. So it's actually easier to manage your risk with the use of options. You can hedge with those options. If you're in one position, you can hedge on the other side. Or indicators. I used to use an ATR as a stop, and that was a really good way to manage the risk. But I always had a hard stop eventually, but I used to call it an emergency stop. And it's like a hard stop, like that is it. But I almost never wanted it to be hit, but I'd take it if it came, right? So I think there's better ways to manage risks than the hard stops, and some of the things I've mentioned. So we'll have a look at some of those. So let's talk about my strategy. Like, what is behind what I do and behind what we do at Comlatech. We deal with cycles. Our whole focus is on cycles. We believe there's repeating high probability patterns in the market, and it's our job to find them. Now, I'm not alone in this research. People have been studying cycles for millennia, right? But in certain terms of the stock market for the last 150 years, I'd say. There's Samuel Benner, 1875 to W. Gann, early 1900s, to Edward Dewey, the Foundation of Study of Cycles, Hurst in the 70s, and so on and so on, and Bradley in the 80s. There's been so many people that have focused on cycles in terms of trying to find ways to beat the market and to make money from the market. And that is what we've decided to do in terms of our time and focus. And the reason for that was I got interested in predictive models in the markets in 2013. So I've really only focused on predictive models and cycles for the last 10 years of my trading career. And that was, I was on a business trip to Florida, and I was about to get in business with a chap in Florida who was significantly older than me. He had been trading for about 50 years, and he was a little eccentric, but he had a system, and he talked about, he made this sort of flippant remark to me as I left the office one day, and he said, the market can sometimes be predicted to the pip to the penny. And I was like, what the hell are you talking about, right? I mean, that is just madness. However, I've sort of fallen down this rabbit hole of trying to predict what's going to happen in the market. And I don't try and predict price to the pip to the penny. I've tried. I just don't want to do that anymore. I just try and get daily direction. If I get daily direction right most of the time, I will do perfectly well. So that's what I focus on these days. So building cycle algorithms has got a multi-stage process for us. We start with paper, then it's a spreadsheet, then into programming, and then program it and code it, then bring it back to paper again to look at how the code does and physically look at it and look at this process. At Comlatech, it's not just me. There's a whole team of people here, and we are focused on trying to make things better every day, basically, whenever we can. And that is our entire focus. To when we're wrong, we want to know why, and try and figure out how we can improve things going forward. So there's a big process to this. So predictive technology is based on the identification of non-chance events. These cycles are using decades of data, basically. And, Jim Simons has sort of talked about this for years, where he's cleaning up data, using data from the past to predict a model going forward. And I believe that really is one of the best ways you can use a strategy that sees cycles repeating. And we believe that if it's happened before, it will happen again. Obviously, people believe in seasonality. I think you can take it a step further than seasonality, and that's what we've done. So just to go over our sort of base profile here, the signal is composed of lots of cycles. Even as you can see on the picture here, there are many cycles going on within this chart. We are using the cycles that are proprietary cycles that we use and are using also price movements from the past to create high probability trades going forward. And we're going to get into a wee bit more detail here in a second. But before I get to that, there's a quote from the most successful fund manager in history, Jim Simons from Renaissance Technologies. And he's quoted talking about the efficient market hypothesis theory, which is saying that there's no way, the market is random, there's no way to predict anything. And he says there's nothing, the efficient market hypothesis theory says there's nothing in the data that will indicate future price data, but it's just not true. There are anomalies in the data. You put together a collection of these anomalies, these subtle anomalies, and you'll be able to get something that predicts pretty well. Now, that's from him. I believe that to be true also, and that's what we're chasing. So in terms of how it looks, this is our base model here. We're using a rate of change calculation. So again, these cycles are repeating, and there's multiple different cycles which we create a composite of, which is what you're looking at on the screen here. And that is using, because price is never as it was, price is constantly changing, where the cycle, this particular cycle was now is very different to where it was before in terms of price. We could go back 50 years, 60 years, 100 years in the S&P, and therefore the price is very different, much smaller than it is now, but it's still moving up or down, still positive or negative. So we're using closing prices on the S&P 500 in particular for the S&P trades and NASDAQ for the NASDAQ to determine what's happened in the past whenever that cycle repeats, what to expect on a high probability basis. And we're using this calculation rate of change because it's the best thing we can think of really in terms of trying to normalize the data in terms of prices, which are so different from the past to the future. And I want to share some cycle forecasts with you. This is 2022 and its completeness. This is actually the cycle forecast we use to trade the World Cup futures through the World Championship, where we got third place here. And this is what we're using. We're using this raw data to determine whether the market was going up or down. Now, obviously, this is the actuals in the S&P 500. This is the ES in orange, and the blue is our forecast. So our forecast is obviously ahead of the market. And as you can see, we don't always get it absolutely spot on in terms of amplitude. The rate of change has got its own axis here versus price, which is the S&P, so a very different axis. But in terms of movements and fluctuations, we try and get as close as possible to this. And as you can see, the trends are pretty much there, especially late in the year. It's a little choppy in March. Other than that, we got really good numbers in January, and then later in the year, great trades into the end of the year. So followed it relatively well. I'm going to zoom in on a little section here. So this is July to October 2022. This is the forecast, and then we have what actually happened. So we're not right 100% of the time. I wish we were. As you can see here, this is the peak in the S&P. This is the peak in our forecast. We're off by a day, right? Maybe 2 days. Same here. But it still can be very profitable if you miss it by a day or two. And that's where we have an algorithm on top of that, a trading algorithm on top of that to manage our risk when we're wrong or we're early. And, we'll cover some of that. This is actually one of our strategies I'm going to talk about. We do use this one's called prophetic, and this is based on the NASDAQ. So this is following the S&P price, but signals actually go into the NASDAQ. And as you can see, there's some really profitable trades in here, longs and shorts as well. But for prophetic, we stick to it long only because it is a higher win rate than the shorts. The shorts are actually harder to catch. And we're using a moving average on our signal to try and smooth it out for when it's wrong, because we're only right about 80% of the time on this, but it'd be like 70% of the time if we were doing it on less than using a moving average. So it's a little different, but I'm going to get into some of those metrics. Before I get into the sort of back tests, I have to put another disclaimer up because we are going to talk about back tests now. These are they have to be put forward from a regulatory standpoint. These are hypothetical. and we have to put this disclaimer up again. So there you have it. So I don't know if you can see this, it's pretty small, but this number here is actually 81.58% as a win rate. So a very high win rate. Again, I'm chasing high win rates in my systems. I want the higher that I would get it to 90, I'm going to get there. I'm going to get it to 90 one of these days. But certainly this is a 10-year back test. And again, these are back test results, hypothetical back test results. But this is the closest thing we've got to that sort of certainty we're trying to find in the markets. We know our drawdowns, we know our average trade size, which is quite large on this one, and I'll show you the next one too. So this is the equity curve for this back test, and this is based on the prophetic system. So this is based on the NQ. There's bumps in the road, obviously. Nothing's perfect, nothing's 100%, but it's relatively smooth trading, and being right 8 times out of 10 helps that. And then that's our expectation, going forward. We don't expect it to not continue to do this. This is what we expect. And unless something happens, we have to recalibrate. But certainly it seems to be running forward in live trading as well as it did in back tests. Unfortunately, we don't have live trading to show you before, I think, sort of midway through last year, because we only joined World Cup Advisor, and we couldn't use the stuff that we had with Comlotech before that, which was running since 2020. But that's the nature of regulatory stuff. We can't show trades that weren't made within the regulatory environment. So, but certainly it's continued to do very, very, very well for the last 3 years in terms of it being put out to clients. This is the Safara one. This is the second system we have. This is based on the ES, and it's a bit more aggressive in terms of there's no smoothing of this one. We just take the trades as they come and then use our algorithm to manage it when we're wrong. This one's right 85% of the time, so it's a higher win rate. And again, this is a 10-year back test, so this is really good numbers in terms of what I'd hope to see and expect to see going forward. And this is something we continue to monitor. We're constantly trying to get a higher win rate, constantly trying to squeeze drawdowns, constantly trying to limit losses. That is the name of the game, right? So we're constantly looking at this stuff. I mean, I spend my days just staring at this stuff, trying to fix it and try to make it better, right? Even though it's already very good, obviously. I mean, we did so well in the championship last year because it's very good, but there's always improvements that can be made, right? And again, this is the back test for Safara. So very similar to prophetic system, prophetic being the NQ, Safara being the ES, very similar systems. This one just feels a wee bit smoother, apart from this bump here, which again is really not that big a deal in terms of the long-term view of the system itself. It stays within its relative parameters. Now, one of the things I wanted to share with you is the forecast for this year. I don't normally put out forecasts ahead of time, but I thought for this webinar and for you guys showing up, I'll share some of our proprietary research here of what we expect to happen. One of the challenges we have with this forecast is we're not always 100% right in terms of tops and bottoms. I mean, I wish, right? But as you can see, even from this chart, this is August 2022 to August 2023. So we've got a couple of months here that hasn't happened yet. And this is our expectation of what's going to happen. There might be a smaller move in the S&P, what it shows here. It could be a larger move. We don't know. And we won't know until that actually happens. But one of the frustrating things is we don't always get the exact tops and bottoms, as I said. And as you see here, the S&P peaked around here in March, or sorry, February, and then went up a little bit higher compared to our forecast. So, it's a little bit off sometimes in terms of exact timing, but it's certainly good enough to be a very profitable system as long as you're getting the trends right. The trends going will do well, and that seems to be what we have going forward. This peak here was actually Friday the 2nd of June. I thought it was going to be the high. Again, we can be off a little bit. Sometimes, the peak before it or the peak after it is actually the high. So today is this peak here. This is the 14th. That's today. This is Fed day. We believe this is the high. and it could be off by a day or two, but we certainly expect the market to start selling very soon. This is not a recommendation to buy or sell anything, obviously, but again, just from our research, this is our expectations. This is the kind of thing we'll be following going forward. We're expecting a bit of carnage into summer, and we'll see what happens after that. But how big or small the move's going to be, we don't know. We don't try and predict price movement. We just try and predict direction, daily direction. So sometimes our projection looks like a little and the price goes a lot. So as long as we get the direction right, it doesn't really matter. That's our hope and expectation going forward. Just to sort of finish up my speaking part here, cycles exist and repeat in the stock market. We have proven that to ourselves beyond seasonality. And our software combines both a forecast and an algorithmic trading system we've worked very hard on. And the only way to access these trading strategies is through World Cup Advisor or the CTA, but we're here talking about World Cup Advisor. There's smaller buy-ins for World Cup Advisor. You can do prophetic, which is our NQ strategies, MNQ. So it's a micro, 1 micro per 5,000, which is actually quite aggressive. So in terms of, if you have $10,000, you could do 2 units of prophetic. It's not a matching funds program. It is a per unit program. So if you had $50,000, you wanted to do this, you can do 10 units of prophetic and just follow on, or watch us for a while, or test us out, and same with Safari Long. Safari is the ES strategy, or MES. So for $20,000, we do 4 micro contracts, and again, you can have multiple units if you so choose. One thing I'll say about prophetic in terms of the MNQ is it is a more volatile asset, the MNQ. Therefore, when it comes to compounding, so say you had like 2 units of prophetic and you wanted to go to 3, I would wait till there's at least $7,500 of profit in there before I'd add another one. But again, this is not trading advice or anything like that. That's not my place to give you that. All this system is a mirror trading service, so you can follow along, and I'm sure Chad's going to cover some of that in his next slides. But certainly, we make it available for you, and we just want to make sure you stay safe and don't scare yourself. And also, if there is a drawdown, and say you had 10 prophetics, and we had a drawdown of $3,000, then you might want to take one of the prophetics off. And that's really sort of the way I would manage the account, the way I manage my accounts right now. If there's a drawdown, I'll take some off because it's micros. You can add and subtract, and then same with the Nasdaq. Well, the Nasdaq and the ES, we can add and subtract micros as and when the account ebbs and flows. But obviously, we want to make sure it's going up over time. Otherwise, there's no service and there's no customers. So that is really all I have to say for my presentation. There are obviously questions that I'm happy to answer.
John, that was excellent. Thank you very much. We do have a few questions already. If it's okay with you, allow me to do my short presentation and then we can address some of those questions, perhaps some of them together.
Okay, all yours.
Thank you, sir. And John did mention his programs in a bit of detail. I just wanted to go over how the actual service works and how his programs are executed, and that perhaps will drive a few more questions as well. For those of you that are not already familiar with World Cup Advisor, and John did mention the World Cup Trading Championships that he did so well in, our business model is really built on those 2 pillars. The World Cup Trading Championships is the longest running real money trading contests in the world, and World Cup Advisor uses a lot of the talent from the World Cup Trading Championships, including John, to offer leader follower auto trade trading service with those talented advisors. So just want to break it down in a little bit more detail. If you visit worldcupadvisor.com, you can get a free guest member login that will allow you to review everything I'm about to show you, and then you can dive into it in more detail as time permits. But essentially what we do is we find talented advisors and they trade their own accounts with their own money. And what we offer to do is to quite literally link your account perhaps to any of the advisors' accounts or programs. And John has several programs. You do have the opportunity to follow all of them or choose one of them. And of course, we can help guide you with your decision-making process. Now, I just have a basic diagram here showing how the execution works and how the data flows and what your visibility is. So let's have John there on the left. He is trading his own account with his own funds and he is executing those trades. When he trades in his own account, those orders get routed to our leader follower technology, which quite literally intercepts those orders and redeploys them to the market in block orders. Now, what that does is provides a zero slippage situation, and that all of the fills are average priced and then allocated to each account appropriately. That means your fills are the same exact fills that John gets in his own personal accounts. That data also gets routed to the World Cup Advisor website at the same time. So if you are a subscriber and you do want to follow along during the day, you don't need to do that. But if you do want to follow along during the day, you certainly can. And you can log into worldcupadvisor.com and see everything. Now, I did mention you don't need to do that. The execution is completely automatic. You can access all of John's trade-by-trade track records and history for his World Cup Advisor programs with that free guest membership. So this is just a screenshot of the closed position section of his COMLA World Cup 2022 Plus. So you can access this with a free guest membership. You can review every single trade he's done in the program if you'd like to. In fact, there is a no paging button that you can click on that will allow you to list all of the data on one long sheet. So it's designed to copy and paste into Excel or any software you want to use for your own analysis. So the point is the website's completely transparent. We show all trades. We do, in fact, have a lot of clients that almost never log into the World Cup website. You don't need to log in if you're following our programs. You can simply depend on your statement that you'll receive every trading day, showing you your current balance, if you're holding a position that night or not. So you can also just depend on your statement if you'd like to do that as well. If you're not already familiar with John, he does have a full bio page up on the World Cup website. You're welcome to read through that if you want to learn a bit more about his background and his strategy. The specifications page for each program is going to answer a lot of questions for you that you may have if you're considering moving forward with any of the COMLA programs. For example, the specifications page is going to show you what markets that program is trading, how long John's been trading the program, what types of orders he uses, a lot of data. In addition to that, it's also going to show you the monthly subscription fee rate. So you can access that and all the fee structure through that section as well. We do have some questions, and some of them are brokerage related, John, some are kind of performance related. So we can just kind of navigate it together. I just wanted to throw the World Cup Advisor contact info up on the screen for those of you that want to contact us directly for questions or to help facilitate your account opening process. Now, regarding, we did have a bunch of people ask about a recording. We are recording today's presentation, and we will send that out to everyone that registered. So no worries on taking notes. Now, John, you did mention funding levels and unit sizes a bit. We did have a few questions on that. Let me just kind of briefly state that all those types of questions and answers really should be handled on a case-by-case basis, one-on-one with your broker. but I can give you some general information. John, you mentioned that the prophetic system, the recommended minimum is 5,000 per unit. Meanwhile, the matching funds level, or how much you are trading with, is about 6,800. So the question is, do you need to match those funds, or can you come in with that 5,000? The short answer is, if you are qualified to do so through your application process, you can invest with as little as 5,000 in the prophetic system per unit. We do have clients that will put in the matching funds anyways, because they just want to take a somewhat more conservative approach. So again, we will guide you and decide together what is the most appropriate funding level for you when it comes to the prophetic system or any of John's systems or programs. Both of us talked a bit about unit sizes and what is a per unit, and how does the compounding work. Let me give you a brief example. If your account reaches that next 5,000 level, for example, if you funded with 10,000 and you're doing 2 units and your account does reach 15,000, will that third unit be turned on automatically? The short answer is no. That process would never be done automatically. You would need to reach out to your broker and give him or her instructions to do so. Now, John did mention that, he personally would wait till you hit about 7,500 in profit before you added that additional unit. You have the right and the ability to add them when you have a minimum of 5,000 per unit. And again, your brokers can certainly help you and guide you with that. We had a question about interactive brokers, if we work with them. Unfortunately, we do not have a direct relationship with IB, but we do have many other clearing relationships. If you already have a futures account, we will determine if we can use that relationship to set up an additional account for you to follow any of John's programs. If you do not have an account with one of our clearing relationships, we can help you establish a new account and perhaps do a partial transfer if you wanted to do that. John, this is a good one. Maybe you can address. It is regarding drawdown, and someone wanted to know what your average time for recovery is, or what are your average recovery periods. Can you address that a bit?
Sure, yeah. I mean, one of the things you definitely cannot avoid completely is drawdowns. They're just part of trading, right? I like to think that our average has been maybe 3 months. That is, obviously they can be a little longer than that over the history of it, but generally speaking, you can see from the back test results, it's usually much faster than that. I like to think that it's going to be a month, and sometimes it is, but certainly it can take a number of months, and you just slow and steady wins the race kind of thing, right? And ultimately, as long as it gets there within a reasonable time frame, then you're reaching new equity peaks, and that's what you're always striving for, right? So that's the generalized idea around that.
Okay, very good. We did have a question about commitments. Now, let me just say in general, there is no commitment. You can stop trading at any time by contacting your broker and giving them instructions to stop or reduce or add units to your account. Now, just so you understand, we make those changes once every business day. We request to have all of those instructions by 2 p.m. Central Time. If we receive them after 2 p.m. Central Time, we will do our best to execute them that same day still. However, it is possible we will not be able to do it until the following morning. So we make those changes once a day, every business day. So you are somewhat committed for a day if you wanted to stop that morning. I think we've covered those questions. There were a couple questions regarding the fee structures. Now, let me mention again, each advisor charges a flat monthly fee. That is the subscription fee. That is how all the advisors make money on our business model. Now, when you are reviewing performance on the World Cup Advisor website, everything is shown in total in a net basis after all the fees and costs have been deducted, and we are required to disclose the performance that way. So if you receive an email from us or you're reviewing a performance report, et cetera, just know that you don't have to do any additional work to figure it out, what your return would have been. I think that it's covering everything. And as far as the questions go, John, was there anything else that you wanted to add before we wrapped it up?
No, just I hopefully some people have seen this and really makes you think, and maybe to watch along for a while if you're not ready to dive in. But we expect to do well. We have done well, and we expect to continue doing well. So if this is something that you want to put a small part of your portfolio on to test us out, we'd be delighted to have you.
Thank you, sir. And thank you to our audience for joining us today. Thank you for your questions. Please go ahead and visit worlcupadvisor.com, get a free guest membership, review some performance, and please contact us if you have questions or need help with your accounts. Thank you so much, everyone. Have a great evening.
Thanks. Bye-bye.